Hello, people. Good afternoon. Welcome to Trends with Friends. Frank Rotman, welcome to the program. QED investors, great to have you here.
Glad to be here.
Howard is having technical difficulties. If you're not aware, Howard has technical difficulties every week, and we cover for him. He's got problems with the microphone, blah, blah, blah. This week, we can't cover for him. So he's just so, it's so absurd and hilarious that a seed capital investor in the technology space can't get his camera right.
Maybe he's avoiding me.
He's avoiding Frank. He never liked you, by the way. He was telling me before the program.
Maybe we're the same person. We can't be in the same room at the same time.
Right.
Antimatter.
You're him with the wig. You got a little wig on. JC, what's up, buddy?
It's a bull market. Look around. Doesn't it feel like a bull market? I mean, you're seeing it in price. More parties. People are having more fun. I'm getting invited to bougie dinners. Like, this wasn't happening 2 years ago. It's just a different environment. And I say that like kind of like kidding and fun, but like serious. Like, seriously. Think about what society was like and our experiences socially when it was a bear market, and think about what it is now and tell me that it's not vastly different.
And we only live once, right? We all have an expiration date, so we might as well enjoy the good times. And we have your Dow theory confirmation chart coming up later in the program, that confirming the bull market, old school style. Michael Parak, what's up, buddy?
Baby, let's go.
It's a beautiful thing. Michael, what's up, buddy?
But always be ready for the bad times. I'm sorry. I love bull markets, but you gotta be ready for.
He is for those of you familiar with psychoanalytic theory, Michael Parak is our Thanatos.
God.
He's a little bit of death instinct for us, hanging around, just giving us just adding balance.
Prepare
he's the yang to our yin.
Prepare for the worst, always.
Prepare for the worst.
If I was a perma bull, but Perlman, you guys know, I don't give a shit what the like. I'll take either side, right? Perlman, tell him. I am
a perma bull. Okay, so let's get right to it. Frank, it's great to have you here. I mean, you have, I was looking at some of your old stuff. By the way, your blog posts, when you go really top down, what is the value of money and all that stuff, man? Great stuff. If you're not familiar with Frankie's FinTech Junkie on Twitter, he puts blog posts right on the platform there, so it makes it really easy.
Actually, FinTech Junk IE, not FinTech Junk Y, but
FinTech Junkie IE.
There we go.
And his stuff is just fantastic. He's got a cute little cartoon avatar and everything. And his commentary, if you like sort of, philosophical and big picture, high level thinking, man, he'll knock you down with that stuff. And so anyway, you were being interviewed. I was looking back at some of the earlier stuff you put out too. And I was looking at an interview that you did with Howard like 3 years going back. This first segment, we're just going to call it VCs Behaving Badly. And you were talking about the froth and sort of what was happening, the FOMO occurring already in that market before we sort of have more recently seen the fallout to it. So I just want to give you a shout out and a quick quote, and then ask you to comment on where we are now. Crazy funding rounds and hyperbolic narratives crafted by founders have created FOMO everywhere in the VC ecosystem. FOMO fuels the crazy funding, rewards founders with that have the hyperbolic narratives. Where are we now? That was 3 years ago, July. Where are we now?
Well, I think we're actually back. So when you think about lessons learned, you hope that new things happen, good things happen, bad things happen, but you're learning all the time, right? You have an ecosystem; it's constantly evolving, and I think during the 2020-21 period, we had froth. We had an exploding ecosystem of VCs and startups. It was almost like this Cambrian explosion where you had tons of startups and you had tons of new VCs, lots of money pouring in. The public markets were rewarding the companies that could go public with these great narratives. But at some point, Darwin comes back, right? And I think that was really the story of 2022 and 2023, is that Darwin had gone on vacation for 3 or 4 years and then finally came back. And when Darwin came back, all of a sudden you're saying, wait a minute, what's the point of a company? Like, the whole purpose of a company is to manufacture something and sell it for more than it costs you to actually build, right? So you build something, you sell it, you have manufacturing costs, and then you have to sell it for more than it costs you to actually produce. And if you can do that at scale, you've got a great business. So Darwin comes back, starts looking at these businesses and says, you know what, some of them are good, but some of them aren't. And valuations come crashing down. A lot of the VCs are scratching their head and said, wait a minute, look at all these great companies that I have. Look at all the great problems they're solving. And the markets are saying, yeah, but how good of a business is it? Not, are you solving problems, but how good of a business is it? So a lot of lessons learned. And the problem is, I think those lessons are being forgotten very quickly. So everyone said, wow, 2022, 2023, really tough time. A lot of crying going on with founders, a lot of crying going on in the VC ecosystem. Like, it actually was a pretty painful time. But now all of a sudden there's a new shiny object called AI. And there's a new shiny object, called, let's take this S-curve, shove it into every single company, put a .ai at the end of it. And guess what? We can start telling narratives again, right? It's not just about, hey, here's how a business manufactures something and here's how they sell it. Let's just tell a narrative. And when you can really start throwing companies into the market that are narrative backwards investments instead of building forwards and really putting the pieces together to build a great business, then the FOMO starts again. And what I'm worried about is that the lessons that we learned so hard about, putting too much money into companies before they're ready for it, not de-risking in stages, not running experiments, and then being honest about whether those experiments work or don't work. I mean, if you're just putting money into companies based on narratives, you're really going to light a lot of that money on fire. And I think you're seeing a lot of that happening in the VC ecosystem again.
And so, how long does that take to play out? I mean, like, what inning are we in right now? Do you, just by your experience, I mean, you've seen this play out over and over again. Saw it with the dot-com bubble, going back 25 years. What inning are we in, Frank?
Well, we're in the excitement stage again, and it's almost like cornered animals in desperation. So you go through this period where you raised a bunch of money, you had really high valuations in your portfolio, you have to mark them down. You go back into a fundraising cycle, and you've got to go back out to your LPs as a VC and say, here's our track record, here's our performance, we'd like some more money, please. And we can talk about like how the VCs kind of broke the LP ecosystem and how all of that works. But, you're reaching your hand out every couple of years and saying, like, I'd like some more money so that I can put it to work. And, when you're raising on a track record where you just had to write down a lot of your companies, you're looking for news. You're looking for that shiny object that you can basically tell to the LPs and say, look, we've written down the old portfolio, but guess what? Going forward, everything is going to be amazing. And the way you do that is by investing in companies where you can get quick markups with high valuations, et cetera, and the cycle kind of repeats again. And I think we're at the beginning part of that cycle again, where, the VCs are looking for those quick markups. They're looking for the hyperbolic narratives so that they can raise money again, after a period where they were marking down a lot of companies.
Michael.
The one thing I would add, I think Frank has great points here, but after 30 years of watching VC, we have one new dynamic, which is that the flood of money around the world, institutional money, sovereign money, just the globalization, deglobalization, etc. There is so much money that the lines are obviously blurring between VCs and private equity and how long companies stay private versus public. All those dynamics have meant the top VCs are now increasingly managing for the size of AUM versus the results of the AUM. What does that mean? That means they're focused on the 2% of their compensation more than the 20%. Meaning, the more, if they run 10, 20 billion, they don't need to worry about the results per investment as they used to. And so that demarcation is a very important thing to watch for. So to Frank, your point, they can cover a lot of sins. from one fund to the other. The evolution of secondary markets means they can leverage from one fund to another relatively smooth. These are mechanisms we did not have 10 years
The
ago,
other thing
15
it's
years
really,
ago.
it's hard for people to internalize, but you should want a capital efficient business, right? Like you should want to put as little money as possible into something and then have the machine turn that into something worth a lot more. But when you're in this AUM game and you're raising lots of capital and you're playing the 2 and 20 game, you're an asset manager more than anything else. And you love capital inefficient businesses because you can put a lot of money to work.
Forever.
A lot of the AI trend, you're playing venture capital with an extra 1 or 2 zeros on the front, but also an extra 1 or 2 zeros on the back if your narrative is right. And it's a very, very different game than how VC was played in the past.
It's billions of dollars in fees per year. On 10, 20 billion.
Caller, Howard Lindzon. Welcome.
Nice of you to join us, Howie.
Fucking Riverside. Fuck you, Riverside. No, seriously, fuck you, Riverside. I know you're in Israel, but fuck Riverside. You today. Anyways, welcome.
There goes that sponsorship deal.
Fucking crap, piece of shit site. I'm so
Can you
pissed.
just email me about how great it is and how it's so much better than mine?
Yeah, it's well, yours is simple, Zoom and OBS. But anyways, boys, when do the LPs care? Frank, like we could make fun of this all day long, but it doesn't matter what we say. The LPs are being dumb.
Howard, almost LPs I talk to, they want to go direct now. It's like, I mean, but they're also they care and they don't care.
How is Andreessen and Sequoia raising these rounds, these $5 billion funds, if the returns aren't going to be there?
Yeah, again, I think it's back to narrative backwards investing. It's about creating generational companies. It's about the power law and the exception rather than the rule. It's about a new S curve that everyone can kind of hang their hat on and say, there is something happening here globally. And there's no doubt that some gigantic generational companies are going to be built based on, what's happening in the AI ecosystem right now. And, when you have the promise of building let's call them decacorns or even, $100 billion plus companies, you don't really want to miss it. And if you end up being kind of in the kingmaker position for a lot of these companies because you have the capital and you have access to the GPUs and, you can see and spot the trends because you're seeing everything that's happening, then at least there's a narrative behind the money flowing in. And you're not going to know whether you're right or wrong for 6 years, 8 years, 10 years. Like it could take a really long time for this to play out. And I'll tell you, like, it's a game that I'm not very comfortable with. This is just me personally. If we have a write-off of 10 million or 15 or 20 million dollars, like it hurts to my core. I can imagine what it would be like, investing hundreds of millions or billions of dollars in a company and then getting it wrong and having to write that off. And I think that's going to become a lot more the norm, when you're taking these gigantic swings to build generational companies.
It's a good segue, I guess, on Nvidia. They obviously had very good earnings. The core thing I would say on Nvidia is that, and this is not a stock recommendation, but after 30 years of watching technology, etc., this is the one company, especially founder, CEO Jensen, the execution is just impeccable so far. And everyone asks, when is this thing over? When will people migrate away from Nvidia chips? From where I sit on a fundamental bottom-up watching of how AI is evolving, and to Frank's point about narratives, this narrative on AI on a fundamental basis has barely gotten started. Nvidia's positioning on what they built on hardware and software stacks with CUDA. I've written big posts on this, like their software mode, etc. Their game is just starting. And on top of that, Nvidia, Jensen has done a marvelous job of making sure his top customers, which are almost 50% of his revenues, each spending $10, $20 billion a quarter to build all these data centers, he's getting them to make bigger and bigger data centers with his latest chips. And that gives him a runway that's at least 3 years in the context of his quarterly models. And I've had a post up yesterday called Supersize It. Basically, about a year ago, everything OpenAI did or Microsoft did in terms of large language models, you did it with maybe 10, 20, 30,000 GPU data centers. Today, the benchmark is 100,000. Elon just built 100,000 GPU cluster in Tennessee, and Jensen helped him get the chips and talked him up in terms of how fast he did it. Meta's doing the same thing. In the next 6 to 8 months, you're going to see these data centers go up to 300,000 GPUs. To give you a sense, 100,000 GPU cluster is $3 billion. That's just for the chips. If you add the power and the cooling and the data center and the bare metal and the real estate and all that, that's $10 billion. And the only supplier is Nvidia. There are a lot of other competitor options. Each one of his customers is building big chips, but it'll take years to do that. This race is Nvidia's to lose. So Nvidia continues to be in the pole position on AI. Number one, he's supersizing his customers. Number two, and number three, the actual work of the AI building is just barely. We ain't seen anything yet. It's just getting started. We have to figure out how to use this compute, this intelligence. But there are 8 billion people who will have lots of applications for this, most of which have not been invented. This November 30th, right around Thanksgiving, is the second anniversary of ChatGPT. And ChatGPT is the hottest app that we've seen with AI, and it is just the beginning of the beginning. ChatGPT is not for most people, most mainstream people. It's for early adopters. And good news, there are tens of millions of those. So that's why ChatGPT is so big, 300 million users a month. But we need billions of AI users, which will happen over the next 3 years. But for that, we need the compute. For that, we need NVIDIA chips. We need it not in hundreds of thousands of chips. We need it in millions. It takes a while to put the data centers in, and that's over the next 2 or 3 years. So NVIDIA is in a good place. Jensen continues to execute.
I think that semiconductors continue to struggle, right? It's been really difficult for investors in semiconductors. New 10-week lows today relative to the S&P 500. Nvidia was really the only party in town, while a lot of these others have been struggling. There's no evidence at all that struggle city ends anytime soon. Technology in general, like we look at semiconductors, 10-week lows today on a relative basis. You've seen a lot of rotation, industry group rotation within the sector of technology, out of semiconductors into software. Software stocks are definitely the leaders within tech, but a small segment of the group, which was why most of technology continues to struggle. New 3-year lows last week in small cap tech relative to the rest of small caps, and semiconductors really struggling here as well. So I don't see, if you look at the long-term chart of technology relative to the rest of the market, this one goes back to the dot-com bubble highs. It should be no surprise that technology has been a massive underperformer since first getting back to those March 2000 highs, right? Like, I don't think that this is a coincidence that Struggle City has started in our first time back to those dot-com bubble highs. So I think that the underperformance from technology is probably here to stay. I mean, it's hard for me to argue on a bullish technology, mega cap technology. We might have some bounces and it could be choppy. Doesn't mean it needs to crash. Could be choppy, but the leadership is elsewhere, not in tech.
Okay, speaking of the relative performance, and you're really talking about tech relative to the broader market, which, by the way, S&P 500 and the total market index are making all-time highs. VTI closed at an all-time high. It's a Vanguard total market index ETF, closed at an all-time high yesterday, and you're seeing tech going lower. But speaking of just sort of this relative view of the world, comparing apples and oranges, over the past week we've had this incredible phenomenon playing out. We see it every once in a while where you have two assets that are comparable assets get really out of whack with each other. And I'm talking about MicroStrategy and the price of Bitcoin. And MicroStrategy is really levered to the price of Bitcoin because they're just buying it like crazy. And, I mean, my first memory of this limits of arbitrage is sort of what the behavioral economists call it, going back to like 3Com and Palm.
Yes.
Michael, I'm sure you have plenty to talk about there on that one. But here's this chart of MicroStrategy to Bitcoin. This one I think is before today because we're seeing a little bit of unwind, although Bitcoin's down too. But JC, why don't you just take us through this, and then with the rest of the group, we'll have a discussion about sort of the behavioral components of what's happening here.
Yeah, I mean, listen, you've seen massive outperformance from MicroStrategy over Bitcoin. You could see it was the opposite before. And then as soon as they started incorporating the Bitcoin strategy 4 years ago, MicroStrategy has outperformed every single stock in the S&P 500. Every single one, including Nvidia, since incorporating the strategy. And you could see this major base. So the question becomes, is this the beginning of this, the greatest strategy in the history of the stock market? Literally earning more money faster than anybody in the history of the stock market. Is that what this is? Or is it really just a Bitcoin? It's really just a Bitcoin play. Throw up slide 10 there, where you can see MicroStrategy overlaid with the price of Bitcoin. It's really going to be that, Bitcoin sells off, MicroStrategy is going to get hammered. Bitcoin does well, MicroStrategy is going to do even better. It's really just a high beta play, basically like a 2 to 2.5x the price of Bitcoin. And then don't forget, it gets better, like, that commercial. But wait, there's more. Then you have the 2x leveraged MicroStrategies ETF. So now you're essentially getting a 4x Bitcoin. What could go wrong?
Beautiful.
Well, this goes to the nihilism. I don't know if Frank touched on this. So again, Phil, you dropped off. You got to get your Wi-Fi fixed. That's not Riverside. That's you. But Phil, we kind of jumped to Nvidia. I want to go back to make sure we covered Frank's topics. So Phil, just we were when you dropped off.
It's a perfect time to bring that up. Beautiful. Okay. It's all good.
All right, Frank, go ahead.
Yeah. So, look, MicroStrategy is making something easy to buy that's difficult to buy for most people. Now, there are new vehicles that are coming into the market with ETFs, et cetera, et cetera. But I think there's a narrative around this that people are buying into. And the narrative is one that, you can unwind very, very easily with logic, right? Like, it is irrational to own MicroStrategy versus Bitcoin. If you own the Bitcoin, you basically can get 2 for 1, relative to MicroStrategy. But being part of the cult of MicroStrategy, being associated with it, being able to, I hate to say it, but be the schmuck at the dinner party that talks about, Michael Saylor and talks about MicroStrategy and being an investor in it and how he's a genius and how he's spotted something that no one else has ever spotted and how it's the best performing stock, blah, 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 blah. Like, there's a narrative around that that's attached to the stock that is more than the stock itself. Now, I'm not saying this is rational. I'm saying that it comes with the territory of investing in MicroStrategy. It's something that's easier to buy. People know how to buy it. They know how to get leverage on it. They know how to do a lot of things with it. So it's a package and a container, but it's also a narrative associated with it as well. And I think that can't be lost.
Go ahead, Michael.
Look, I've been on record on the show, several shows in a row on crypto and Bitcoin, etc. On a fundamental basis, I love technology and I understand technology bottom up. I understand the technology behind crypto and Bitcoin. I love it, the potential, etc. It's been 15 years. We haven't seen one mainstream app around this stuff other than trading and making money, and it just goes up into the right when there's political elements that say, oh, this is going to be a reserve currency and all of that. A friend of the show just sent me a thing that said, these guys are getting high on their own supply. It reminded me of the movie Scarface. This is, everyone is just celebrating the bull momentum here. The charts are up and to the right. We've seen this time and time again for thousands of years. I mentioned the tulip thing, and JC pointed out that was one cycle. This is hundreds of cycles. There's meme coins, Bitcoin, MicroStrategies, etc. And fundamentals matter. As you said, Frank, the dinner table, everyone, the bull case is, oh, it's going up, and this guy's so smart, and he's made more value than Jensen, etc. Horsepucky. I mean, Jensen's stuff, those chips and so on, there is absolute real narrative, Frank, There is a real narrative and fake narrative, and I just want to point out the difference
Yeah.
when we
So,
talk about these things.
so I wrote something on this today, actually.
Thank you. I will read it.
Called, what is value? And it's actually a highbrow philosophical thing about, money and value and how we can ascribe value to anything that we want to ascribe value to. And I think that there's a big difference between a company, and a company is designed to manufacture products or services at a lower cost than they can actually distribute it and sell it for. Like, that's the whole point of business, is to capture, the value in between. And if you have a machine that can do a lot of that and can do it durably, like, that's great. The machine is worth a lot of money.
Yeah.
But we can ascribe value to anything that we want to ascribe value to as a society, and if we decide something is worth something, and collectively as society, we say we're going to use that as a store of value, we're going to use that to be able to trade, then it's not up to you or me to say, look, it's not a company,
Correct.
it's not a value producing, it's not a cash flow producing asset, but it is something that collectively as society we've agreed has value. Now, Bitcoin to me is much more interesting at 100,000 than it was at 300. Because the collective belief in what that thing is actually more interesting now, because it's now entered society, and we say, look, this now is a vehicle for trade. This is a vehicle for a store of value. This is something that we can all agree that if things go wrong in country X and people in country X want to move to country Y, like, they have the ability to take their value with them, because collectively as society we've agreed that this thing is a store of value.
And these all come along, Mike. I think this is what's interesting. This goes to I just had to look up nihilism. So, Frank, you've said it. Justin Paterno said it. I'm embarrassed. I didn't know what the term meant, but now that
It's from Big Lebowski, the nihilists. They believe in nothing, Lebowski. They believe in nothing.
We've seen this play out over the last few days. I don't know if we saw this with Pump.Fun. It seems like the founders are nihilists, but the enough isn't enough, right? It's not enough that they're making $1 million a day. They got a live stream lunacy on top of it all, right? That's nihilism to me. But going back to this, this is all also happening at a perfect time, right? You had the money printing, you had the sloppy LPs, you have the sloppy VC behavior, you have this. It's not just happening in Bitcoin, Mike. It's happening in AI. It's happening in creator economy. How many hundreds of millions did Andreessen and co. and these knockoffs in creating another Facebook just for Rihanna or just for Taylor Swift? Like, Facebook wasn't good enough. We'll create a new one with a whole new like system. So this has been going on for 3 or 4 cycles. It started with Web 2. And what made Web 2 fun was we were coming out of a bear market. So no one believed, right? YouTube came out, this won't work. Twitter came out, this won't work. And by 2016, it wasn't that this would work. It was that, like, this can't not work. And that's when SoftBank came in and started pricing things insane and bullying money around, right? This was like the perfect storm beginning. And then it wasn't just that SoftBank did it. Everybody predicted SoftBank was the top because we had never seen anything like that stupidity. And guess what happened? They turned out to be halfway there, meaning people started copying SoftBank.
Yeah.
Right. And so it's not surprising to me that not only do we have MicroStrategy, we have MicroStrategy U, MSTRU, because good traders would rather trade something with even more volatility than MicroStrategy. So, Mike, this goes to Frank's point, because this is why I love talking to Frank. This just keeps building, right? Like, we thought 2016 was silly. We thought COVID was silly. We thought Trump 1.0 was silly. We thought Trump 2.0 silly. And now we enter this era of not all this liquidity, stupidity, degenerate economy. You also have a new real-time economy brewing on top of this, which is not Twitter. Twitter's dead. People can make fun of us for saying Twitter's dead. You know what's not dead? Netflix and Spotify, their ability to funnel people to an event that can be gambled on, watched. We have coffee. So as much as I like, and this is where JC can go to the market breadth spreading out. Not only do we have the silly in one corner of the market, but the financials are breaking out, and biotechs can't be,
and discretionary,
and biotechs can't be killed, even though RFK says I want to kill them.
But
right? Or
I think,
and
you know,
vaccines are bad.
yeah,
So
people end
so it's
up
really kind of
acting,
the weirdest. Sorry, Frank. This finished up here.
yeah,
It's kind of the weirdest thing I've ever seen because everybody's behaving the whole game seems to be different because all the players seem to have bought into some narrative that whoever is the better storyteller gets the mic. If you're a
yeah,
great storyteller like Joe Rogan, you get the president on. If you're a terrible storyteller, you have no shot. But if you're a great storyteller, um, it's not just MicroStrategy, it's Palantir, $150 billion company. Alex Karp has been an incredible storyteller the last 2 years and quietly selling five. I don't blame him. Sold 400 million worth of stock. So it's not just Bitcoin; it's real companies. You know, in Web 2, it was Salesforce. Benioff told a great story, and he backed it up by buying the future with acquisitions. Then along comes Web 2.0, and you could back it up with like unlimited growth. Uber would you would download Uber, and 10 other friends would download it because you showed them the app. Robin, you do a trade on Robinhood, share it on Reddit. 10 people would do that. That ended, and we still have companies priced as if they're going to have negative customer acquisition rates. So it's just like everywhere I look, there's lunacy.
yeah. So this is human nature. I mean, we're all playing games, right? It could be a game in the stock market. It could be a game in life. It could be a game with your family. I mean, everything is a game. And there are rules to the game, and people try to understand the rules. And when they're playing a game and they can understand the rules and they believe they can win with those rules, then they behave rationally, right? Because they say, look, this is a game that I think that I can play. I think that I can win. I can end up where I want to end up. But when there's a game that you don't understand the rules or you don't think it's winnable, that's when nihilism comes in. And that's when things start to break down and become irrational. And that's where you're seeing people saying, wait a minute, if I just follow the playbook everyone is telling me, I lose. Right? So if I go to school and I do the things I'm supposed to, and then I go into the workforce and I get a job, and then I'm working, a job that I don't like, and then I can barely pay my bills and I can't afford a house. And like, I just don't see that this is a game that I want to play and I don't know how to win it. Then everything breaks down, right? And that's financial nihilism, like at its core, where they say, look, I don't want to play the game everyone is telling me to because I'm destined to lose. So let me play a different game. Let me play meme stocks where, guess what? It has nothing to do with the fundamentals because I might be able to win that game. And I can have fun doing it, and I can yell at people and scream and do all of the things that come with it. And I can have a social experience so that even if I lose, I'm losing with a bunch of other people and we can laugh because we're going to lose anyway. Like, it doesn't really matter. And when you think about a lot of these extraordinarily high-risk trades and a lot of the vehicles that are coming out and the betting that's happening, people are moving away from fundamental investing because they don't think it adds up to like a game that they can actually win. So, I'm in a lot of these crypto groups and NFT groups and meme coin groups. And for me, like I'm the old guy that thinks more like Charlie Munger, than, all of the new guard people. Like I think in terms of cash flows and I think in terms of companies. And people ask me, they're like, where's the next 100x coming from? Where's the next 100x, 100x? And I say, well, if you can find something that can compound value at 20% a year for 25 years, like, there's your 100x. And they laugh at me. They're like, no, I mean by tomorrow. Like, where can I find the 100x that,
By the way,
I can
since we're
press the
here, where
button
can I
and
find one of those for tomorrow?
right,
Yeah,
but it's
I'd
a
like one of
completely
those.
But
Can I get one?
that's as old as time. People have always wanted the
Right.
fast fix.
Yeah.
It's the oldest thing on
Yeah,
planet
Michael
But
Earth.
now you can manufacture them. You can create
You can
narratives around
manufacture them,
them.
Mike.
You can put
You
games together
Yes, but
around
that
those
doesn't mean
things.
anything. There are more atoms than there are sand on the beaches of the thing. Manufacturing doesn't mean anything. At some point, people will say it doesn't make sense. I grew up in Kuwait. Okay, look up Souk al Manak. There was a shopping mall, and each stall was worth hundreds of millions of dollars for a bunch of years in Kuwait. One of the richest
I remember
Gulf
that.
countries in
What?
the
That was
world.
in the 70s or 80s?
70. It was
Yeah.
before I was there. My dad lost his shirt and he wasn't even trading. He was collateral damage because he had business dealings with somebody who got wiped out. And my point here is that and you could, and they were manufacturing more shopping malls, like they could, because it was easy. And my point is, yeah, you can manufacture anything. Digital is fine, but please don't forget, to Frank's point, the way to make money is the Charlie Munger way. You got to look for
Yeah,
the
yeah, yeah.
value.
Yeah.
It's being patient.
But that's investing versus
I got it.
speculation.
But
we
we
and
have
they
a
are very different
generation.
things.
We have generation of people in a bull market, because we come on the show and we celebrate it's a bull market. It's charts are going up and to the right. That's why I'm the person who says, hey, watch both sides, because when it's excessive, we need to call out the other side, that things
But
are a little bit
Mike, I mean,
juiced up.
let's do. You did a great job last week. Everybody was fooled, including me. I called my mother and said I pissed off Michael. My Michael said, my mom called me a couple of names, and she said, as long as you were mean to Phil, then I forgive you being, causing Mike a ruckus. But I honestly think on this show, and look who we got on this show. When Frank was last on Panic with Friends, the reason I bought Frank on Panic with Friends in 2021, because we knew it was a nut job then. So you also have to read between the lines. If you're smart enough to watch a show and if the show's growing an audience, you're smart enough to know that we can separate being in a giddy mood from acting giddily, right?
Yeah.
True Zen comes from looking at the market and doing nothing.
No,
right?
I agree,
Because,
Howard. I
yeah.
agree.
Yeah.
It's just
So-
that when I'm in an Uber and I've got a 25-year-old
But
saying
that's
that
signal.
I know it's a major.
It depends
I'm getting
what you
more of
use
those
with that signal.
I'm getting
But
more
when
of
we
those.
when we get a person like Joe on the show and we let him riff, I mean, there is a case to be said for these people playing this other game.
Yeah.
It is a different game.
I think where the trouble has crept in here is the so-called professionals are doing the exact same thing as what they say the amateurs are doing.
Thank you.
And I think that's always what StockTwits was about, is like, it was a piss on,
That
twits is a British word, but it was a piss on who are the experts. Right?
Howard, you put your
Like,
finger
I know
on it.
who the experts are. They're on the show. There's Phil
Yeah.
behaviorally, there's JC top-down macro money flow, and there's Michael Perec, one of the smartest guys I've ever met. So whatever that's worth, and you have the resume to back it up. When we have guests like Frank on, Frank agrees to come on the show because he says, you know what? I know I trust these guys, and we're going to talk about everything under the sun. But we have entered this weird, and people are lucky they can go read Frank for free, or Phil for free, or JC for free, or you for free. But we have to be able to flesh this out and laugh too, because the behavior is laughable. What I see as nihilism, it hurts me, right? Like, it hurts me, but I also understand what Frank's saying. Every time I walk in to buy nerds, because I'm addicted to nerds, because somehow the fucking candy companies figured out how to turn candy into vaping, I see people buying the fucking Powerball. And I'm like, how is this any sadder than the Powerball? This is just
Tax
an
on the stupid.
Yeah,
What's
and
that?
I think there is a
Sorry,
difference.
JC?
It's a tax on the stupid.
Yeah, so
I
if you think
understand.
about-
So how is this nihilism any fucking more nihilistic than the government's tax on stupid?
so
So
Just
again,
because you can analyze trends here versus just
I
gambling
agree.
and knowing you're
I'm
going to lose.
saying every time I see a guy at the store now buying a Powerball, I go, dude, download Spot.dog and blow
Yeah.
your brains out. And they go, what? And I'm like, these people can't even get their nihilism right.
yeah,
They
So-
are still playing a game that is a tax on stupidity versus a game that's potentially at least something that you could learn and not be the dumbest guy in the room. But
Right.
again, probably all stupid to talk about. At least we talked about it, and I think the underlying thing of this market is, surprisingly, and we should probably get to it at the end, Phil, when I leave, is how does this play out in the end? Is Trump 2.0 the end of this? Are we another Germany? Are we going to inflate this thing and everybody leaves the room and we're left with zero? I mean, we all have to have that discussion at some point, is like, how much is enough? And when do we all get caught in this drain of nihilism that's happening in the market? But I'll send it back to you,
Yeah,
Phil.
that-
Okay,
Go
so
ahead.
let's go to the most interesting chart in the world, because it addresses this perfectly, and I'm going to let JC walk through it. Earlier in the week, Willie Delwich posted this chart, and basically it cuts through all of the nihilism that we are discussing. The name of this program is Trends with Friends. We know that trends are something that we can quantify and then we can build rules around. So we post this chart. We've been above a rising 200-day moving average for 369 trading days. That is not nearly the longest stretch. So we know that it can go on a lot longer. JC, why don't you just walk us through this and tell us what's going on here from your point of view?
Yeah, no, there's a chart from our friend Willie Delwich, which is basically measuring if stocks are above their 200-day moving average. Very simple, and there's nothing magical about 200-day. It could be the 205-day, it could be the 193-day. But generally speaking, if a stock, or in this case an index, is above a rising 200-day moving average, it's probably not in a downtrend. I mean, it's just kind of like a very simple way to do it. There's a lot of other ways to do it. This is a very simple mathematical way to do it. You could play with it, you're going to get the same data. We're in an uptrend, we know. And this is just further evidence of that. Also, from a breadth deterioration standpoint, taking this one step further, the market historically doesn't peak when things are the best. In other words, the indexes, the market overall continues higher for some time despite weakness underneath the surface and breadth deterioration. So the fact that we have close to the most amount of stocks on the New York Stock Exchange making new 52-week highs above their 200-day moving average, small caps made new all-time highs, transports made new all-time highs, the Dow Jones Industrial Average, S&P 500, all making new all-time highs. And we had the most amount of stocks on the New York Stock Exchange hitting new 52-week highs than we've seen in 3 years. Same thing on the NASDAQ, by the way. So we have yet to start the period of breadth deterioration, which could take 3, 6, 9 months before the major indexes peak. We mathematically haven't even started that process yet. So I think bigger picture.
JC,
I think
thank you. This is really what makes me happy to tune in, even though we get silly sometimes, is I want out. I'm 60 years old, Frank. I'm fucking sick of the game. I just saw Fred Wilson. We're having good laughs. We work really hard. I saw Roger Ehrenberg. I saw Howard Morgan. I got to sit with people that have been through. They have seen things like you, Frank and Michael, that I hope I don't see. And so I'm looking for JC to just tell me, I got 1.5 feet. I got 1 foot, half a prostate out the door. By the way, I just said prostate and I have to pee, so I'm going to run. But I got one. There was some divergences showing up a couple weeks ago in the indexes. Got a little nervous. JC said, "Don't worry yet." I'm watching what happened in Pumped on Fun the last few days. I'm fucking sick to my stomach. I feel like we've lost our way. I feel like everybody's at Mar-a-Lago getting their share right now. But the breadth, I mean, I don't want to fucking let the price get in the way of what's happening. And the price says, I'm waiting for JC to just say, get worried. I'm fully worried from a nihilistic standpoint, but I'm zero worried based on the price action and what I'm seeing. So it's just one of those like weird moments in time for me. It's like
Howard, I just want to underline one of the key things you said today was it's at the core of what's worrying me as well, which is that the professionals, the big guys, are basically endorsing
They're
this.
all
They're all in, and that's the worrisome aspect, right? When you mention previous trends, that is I don't know how to encapsulate that, and I'd love JC's advice. I mean, I don't know how to capture that in a chart, but we don't see that often. It's like, the other shoe to drop is Warren Buffett saying, he bought, $20 billion of crypto or Bitcoin at this point. But I'm just saying that's almost where we are. It feels like that. And
when you quantify the sentiment, the data doesn't suggest that things are frothy at all.
No, I got it. I'm talking about the big guys, the professionals.
Phil, I got to hop. My phone is on fire. Frank, sorry, and Mike, sorry for the technical difficulties on my end. JC, see you guys.
Thank you, Howard. We love you.
Adios, buddy.
Peace.
I just have a comment about this, and what JC's doing here, and what Willie did was they are adding order to an apparently disorderly or chaotic or entropic world, and the beauty of it is that you can really distill it all down to a few simple rules. Like if we break below the 200-day moving average, going back to Marty Zweig,
Paul Tudor Jones. That's a PTJ thing.
Paul Tudor Jones, the same thing. I remember Zweig talking about it on Wall Street Week back in like 19 bada bing. And so it adds order to the world. I mean, if we want to look at the nihilistic side, we want to look at the entropic side, we can go back forever. You know, the philosopher Yeats, it's been 105 years since Yeats wrote The Center Cannot Hold. And the beautiful thing about what Willie does and what JC does is they add order to the world, and we can live in a universe. We can. Our mind is fantastic. We can decide that the universe does have order, and we could just say, okay, we're gonna make it simple. We're gonna add order to it, and there's nobody that can tell you that is false relative to what we're talking about before, which is also hugely relevant. I mean, there is so much insanity. Michael, my hypothesis would be that the adults were never adults. There's never been adults. The pros have always been subject to the same emotional whims that the retail guys, that the smallest, that your Uber driver.
The ego, Perlman, might even be more fragile.
Correct.
It might even be more fragile because they have so much invested in this is the hat I wear. This is my profession. I'm an expert. I'm running hundreds of millions and billions of dollars. Right. Okay.
Well said.
When you're winning, you can take risk. You can do things and look silly. You know, you can build a track record. You can have people throwing money at you and say, look, I'm going to do things that might look silly on the surface, but you're going to trust me because of everything that I've done for you in the past. And then when you stub your toe doing these silly things that we're talking about, the professionals, you know, investing in a very strange way, it's just a correction. And then they pull out of what they were doing and they go back to playing the game that they know how to win, back to fundamentals. And, you know, hopefully you get another, you know, long stretch where Darwin is back and you say, great, we're going to evaluate things the way we did before because that was working for us. And that's where people are patting me on the back because I saw success. But when you can succeed doing irrational things and doing rational things, like you're actually going to do both. And by the way, sometimes people who have been playing a really straight game for a long time, they find it fun to do something a little bit different. They find it intellectually stimulating to do something a little bit different. So I think you go through these patterns and it's kind of like a pendulum that ends up swinging. And I think we're at the point where the pendulum is not in the center, right? Like it's a little bit in the crazy land, you know, and we'll see what happens when people stub their toe, when the world comes crashing back and we start evaluating things, like how far does it swing back in the other direction?
Correct. Frank, one of your best quotes today, Darwin goes on vacation. Awesome. You're totally right. And we just have to understand that he comes back or she comes back.
JC, before you hop, any last words about this?
I would just, you know, sort of reiterate the underperformance in technology. I think nobody's really talking about it. I think people confuse what stocks are within technology and which ones are not. Amazon's a big component of the consumer discretionary sector. Amazon is not in any of the technology indexes. So just understand that the strength in consumer discretionary, the strength in communications, mostly consumer discretionary, industrials, financials, and then within here, you could see the equally weighted consumer discretionary index just hit new all-time highs. So you have these people that are like, oh, the new all-time highs in discretionary, it doesn't count. It doesn't count, JC, because Amazon's 22% and Tesla's 14%. Fake news. You know, it's too, you know, right? This eliminates all of that. Amazon and Tesla may as well not even be in the consumer discretionary sector, and it's still making new all-time highs. And then on a relative basis, we talked about it for months. We talked about it. They need to step in. They need to buy discretionary because if this bull market has legs, then discretionary is not going to complete a 10-year top and collapse. Because if discretionary completes a 10-year top relative to the market. Bull market canceled. That's it. So if you don't think that bull market's canceled, then you got to reverse engineer that and buy discretionary. That's what we did, and you're seeing it play out. And if this bull market has legs, you're going to see Amazon continuing to make new all-time highs. Rotation into Tesla continues, regardless of any of the fundamental stuff. It's just money flow, and the squeeze in consumer discretionary should continue. Long dicks keeps working, right? The old saying, you don't want the short dicks, you want the long dicks. New all-time highs, absolutely killing it.
Hey,
So
any
part of
questions?
discretionary.
I'm getting questions from our chat. Real with the question about small caps. All of a sudden, small caps are performing really well, and we're getting a lot of questions. I know there's a January effect. You have a take here in this sort of, into the end of the year.
Yeah, well, it's not that small caps are just getting going. There have been a lot of small caps that have been working this entire time. In fact, small cap industrials have been outperforming all the large cap indexes. So there have been small caps working this entire time. It's just that a quarter of the entire small cap indexes is regional banks and biotechs. There's a ton of them. So if regional banks and biotechs are out of favor, then the small cap indexes are going to have a hard time moving forward. So think about it like that. There are consumer discretionary, small cap discretionary working as well. Small cap technology not working, making new 3-year lows relative to the rest of the market. So when you think small caps, I would encourage everyone to dive in and go sector specific, because there's super wide dispersion amongst returns within the small cap space, which is not unusual at all, by the way. So be careful when you think about small caps just starting to work. Been working. It's just that the indexes are now making new all-time highs for the first time, while the mid-cap and large-cap indexes already were.
JC,
Beautiful.
are you still seeing strength in the mid-cap area of the market?
Oh yeah. Of course.
Because I know you were talking
Yeah,
about mid-caps the last few weeks. And
no question. New all-time highs for the S&P mid-cap 400. The Jan Brady's of the world don't get the attention that they deserve. But the mid-caps are a great space, for sure. Continue to work. Yep.
Riley, what's up, buddy? You want to give us the
Adios, guys. I love you guys.
later, JC.
see you, JC.
Riley, you want to give us welcome? Great to see you. Are we out of there?
got
There
the
it is.
intro.
Trends with no friends.
We got an intro.
What do you got?
Well, selfishly, I was asking JC about the mid-caps because we're looking at a mid-cap industrial today. So MasTec is an $11 billion North American infrastructure construction company with 1,600 followers on StockTwits. Looking at the stream, they average less than one post a day. So a relatively lower follower count, but even fewer or less activity on the stream. Late last month, the company beat bottom line estimates at increased guidance. And we can see on this daily chart here, just the stair step up and to the right. And then Kiki, if we can go ahead and take a look at that weekly chart, we can see this massive 3-year base that MasTec is emerging from. So we've already kind of broken out of these levels, and it looks like as long as we're above 135, the path of least resistance is up and to the right following that stair step.
So for new viewers, Trends with No Friends is just finding great companies that are trending that nobody cares about, right? That just has a low number of followers on StockTwits. And here you have like the most boring of the boring. Infrastructure play, construction company, 100-year-old company, $10 billion or $8 billion company, one message per day or less on StockTwits. And meanwhile, look at these beasts, these chart beasts. That's a great pick, Raleigh. Thanks, buddy.
Mm-hmm. Yeah, especially in this insane world that we're living in with what you guys are touching on meme coins. It's kind of refreshing for me to go through this practice every single day. Keeps
Great
my head
stuff,
on.
man.
Great one.
This is just pure value that you bring every time. We're running out of time. Michael,
Thank you.
Frank, I'm going to give you the last word, but before we go there, Michael, what do you got for us? Last words.
Last words on just AI in general. Look, I agree. We have to separate the financial performance of these things from the fundamental, and that's a very tough thing to do. So what JC said in terms of semiconductor charts, etc., those are market actions in terms of today's near-term perceptions. The longer-term perspective on AI is that a lot needs to be built, and we're going to find lots of use for it. But at the same time, we're not going to get immediate gratification quarter to quarter when you look at SMH, for instance, on semiconductors across the board. But when we have these air pockets, etc., if you're a long-term investor, it helps just adding for the long term kind of thing, not stock advice.
Got it. So you're
But
waiting
long
for
term
the
perspective.
pendulum to swing back a little bit. Frank, great to have you. Any last words on the program?
Yeah, the only thing I'll say is, living in both worlds of fundamental investing, but spending a lot of time with, people who are trying to figure this out for the first time. There's a difference between speculating and investing. They are not the same thing. Know what game you're playing. If you're investing, it's about finding a source of compounding value and then letting time do its thing, right? And speculating, it's not about that, right? And it's okay. Like, that is a different game to play. It's not necessarily a winnable game, but you can win unwinnable games, right? And if people want to speculate, they can speculate, but don't conflate the two. Those are very, very different things.
Perfect summary, wrap up for today's program. Thank you again for being here. Thanks everybody for tuning in. Michael,
thanks everybody.
Riley,
Have a great
thanks for coming in.
Thanksgiving.
See you guys.
Happy
Have a
Thanksgiving.
great Thanksgiving, everybody.
Beautiful. Adios.
Wonderful. Thank you.